Okay, so welcome to the deep dive. We're diving right into a big one today.
Yeah.
President Trump's new global tariff plan.
Mm.
And, you guys are here because you want to get to the bottom of things.
Right.
Cut through all the noise and really figure out, what does this actually mean
Absolutely.
for me and you?
Yeah.
So we found this really interesting article from the Motley Fool.
Okay.
It's called, What Does Trump's Tariff Hike Mean for Consumer Goods Investors? And even if you're not spending all your time checking stock prices,
Right.
this article is really helpful because it breaks down how these tariffs could actually affect the prices of just about everything we buy.
It's kind of scary.
Yeah. So our mission today is basically to figure out how far these tariffs actually reach. Like what kind of impact are they going to have on American companies and our own spending power as consumers?
Right.
And then we're going to look at what the Motley Fool suggests in terms of how to deal with all of this, how to navigate it.
Like our strategy.
Yeah, exactly.
Nice.
So
Sure.
the article starts out by pointing out that, Trump had focused a lot of tariffs on countries like China, Mexico, and Canada previously.
Right.
But this new plan is way broader.
It's huge.
It is, yeah.
Yeah.
Now it includes basically any country in the world
Wow.
that puts import tariffs
Wow.
on goods coming in from the U.S.
Okay.
So it's like this tit for tat thing.
Gotcha.
You put tariffs on us, we put tariffs on you.
Right. Okay.
And this all went into effect
When did it start?
the beginning of April 2025.
Okay.
So we're right in the thick of it.
So we're seeing the repercussions of it.
Exactly.
Okay.
And, they lay out some pretty specific examples
Okay.
of how this works. So
Let's hear it.
goods coming in from China now face a 54% tariff.
Whoa.
Yeah. And products from the European Union are subject to a 20% duty.
That's a big jump.
It is a big jump.
Yeah.
And then
I imagine it doesn't just stop there.
it doesn't stop there.
Okay.
There's also a baseline tariff of 10%
Okay.
that applies to basically every other import.
Wow. So basically everything's more expensive now.
Pretty much, yeah.
Okay.
But there is one really important exception that the article points out.
Okay.
So the free trade agreement between the U.S., Mexico, and Canada,
Okay.
that's still in place.
So that one's safe.
So that means that things like agricultural products, textiles,
All right.
certain other categories of goods
Okay.
can still move between those three countries
Gotcha.
without these new tariffs being applied.
So that's a key exception.
Yeah, it is.
Yeah.
So,
You would think the markets would react to this pretty intensely.
oh yeah, big time. And the article says that, following this announcement, stock prices tanked.
Yeah.
Both the S&P 500 and the NASDAQ had their worst single-day performance since 2020.
Wow.
So that's pretty significant.
That is really significant. Yeah.
And they point out that there's two main concerns
Okay.
that investors are focused on right now.
Okay.
The first one is these higher tariffs are probably going to lead to higher prices for consumers.
Right.
And that could really cut down on how much people are actually able to buy.
Especially discretionary stuff.
Yeah, exactly. So
If you're having to pay more for groceries
right.
and gas,
Right.
then yeah, you're going to cut back on going to the movies or,
Absolutely.
going out to eat.
New clothes, all that stuff.
Right.
And then the second big concern that investors have is
Let's hear it.
how it's going to affect company profits.
Right.
So if businesses are having to pay more to import
Yeah.
raw materials or the finished goods that they need,
Right.
that eats into their earnings.
Right. Absolutely. And those added costs, they have to be dealt with somehow.
Yeah.
Either the company makes less money, which they don't want to do, or they pass those costs onto the consumer with higher prices,
Right.
which we don't want.
Or some combination of the two.
Yeah, exactly.
And so when you put all this together,
Yeah,
consumers buying less, businesses facing these higher costs.
right.
It's not surprising that some economists are starting to get a little bit nervous.
I can see that.
Yeah. About the overall economy.
Okay.
Some are even saying that we might be headed toward a recession.
So it sounds like we're in a pretty tough spot,
It sounds like it could be, yeah.
especially for companies that sell directly to us.
Yeah.
Like those consumer goods companies.
Right.
They're
Yeah.
facing higher costs and potentially less demand
Yeah.
if prices go up.
Yeah, absolutely. But the article does make this one really important point.
Okay.
They say that while these tariffs create challenges,
Right.
well-established companies in the consumer goods sector
Yeah.
they're not necessarily in trouble.
Okay.
Like
they got some tricks up their sleeve.
They do, yeah.
Oh.
They often have the resources and the strategies to be able to deal with these kinds of situations.
So they've seen this before.
Yeah, they have.
They're not rookies.
No, not at all.
Okay.
And the article reminds us that, these companies have faced tough economic times before.
Right.
They point to, the period when we had all that inflation.
Right.
And the supply chain issues.
Yeah.
Like they figured out ways to adapt then.
Yeah.
And they suggest that they're probably already getting ready to adapt again now.
They're pros.
Yeah.
Okay, cool.
And then they actually give some really helpful specific examples of companies.
Oh, perfect. Let's hear it.
So we can see how this works in action.
Yeah.
Let's start with Costco.
Okay, Costco. Love Costco.
Everybody loves Costco. And their CEO, Ron Vakris, when he was asked about the tariffs during their last earnings call, he sounded pretty confident.
Oh, okay.
He said, and I'm quoting here, "Our people are very well equipped to deal with anything coming our way."
He seems pretty sure of himself.
Yeah, he does.
Okay.
And so what's really interesting about Costco's situation is that their whole business model is built on buying in bulk.
Right.
And offering super low prices.
Right.
So they already have these really small profit margins.
Right.
So the article argues that this actually gives them a bit of wiggle room.
Okay.
Because they might be able to, absorb some of these tariff costs.
Okay.
Or adjust prices a little bit strategically.
Right.
Without,
losing their appeal.
Yeah, without losing that whole value proposition that Costco's known for.
Okay. So they're ready.
Yeah, they seem like they're in a decent spot.
That's good.
And they're not just relying on, their existing model.
Okay.
The article points out that they're really good at switching out products for lower cost alternatives.
Okay.
So if a particular imported item gets too expensive because of a tariff,
right,
they can basically just find a similar product from somewhere else. Or even tweak their own Kirkland signature line.
Oh, I see. Okay.
And
do they give an example?
They do. They give the example of the Kirkland signature purified water.
Okay.
So they actually started producing that locally in China.
Okay.
And by doing that,
yeah,
they were able to offer it at over 20% savings for customers.
Wow, that's a big deal.
Yeah. And then, of course, we have to remember that free trade agreement
right,
with Canada and Mexico is still in place.
Right.
So that could also
cushion the blow.
Yeah, exactly.
For certain items, at least.
For certain items, right.
Okay.
Okay, so moving on to Target.
Okay.
Their CEO, Brian Cornell, he had previously voiced concerns.
Okay.
About potential tariffs on agricultural products coming from Mexico.
Okay, so things like
avocados, bananas,
right,
and how that would lead to price increases for shoppers.
Of course. But I guess he doesn't have to worry about that now.
No, not as much.
No.
The article points out that because that free trade agreement is still in place,
right,
those agricultural products from Mexico won't be subject to these new tariffs.
Gotcha.
So good news for Target.
Good news for Target shoppers, too.
Yeah, absolutely.
Okay.
And Target has another big thing going for them, according to the article.
Okay.
And that's their private label brands.
Right.
So they have over 45 of them.
Wow.
And more than 10 of those brands bring in $1 billion in revenue each year.
That's a lot of private label.
It is a lot of private label.
Okay. So what does that mean for them in this situation?
Well, basically, because they own these brands,
right,
they have a lot of control over the costs.
Okay.
Like they have more say in their supply chain,
right,
how they price things.
Okay.
So it gives them another way to deal with, increased import costs.
I see. So they can kind of shift things around if they need to.
Yeah, exactly.
Okay.
So last but not least, let's talk about Amazon.
Amazon.
And the article acknowledges that, like most retailers, they're going to face some headwinds from these tariffs.
Right, of course.
But there's this really interesting potential benefit for them.
Okay.
The article calls it a tailwind.
A tailwind.
So Trump has actually gotten rid of the tariff exemption on goods coming in from China that are valued at less than $800.
Okay.
And this change goes into effect in early May.
Okay.
And that exemption was originally put in place to make it easier to process low-value shipments through customs.
Right. So why is this a big deal for Amazon?
Well, that exemption was really benefiting some of Amazon's competitors.
Okay.
Particularly like those fast fashion companies like Shein.
Right.
That import a lot of inexpensive goods from China.
Right.
Directly to consumers in the U.S.
Right.
So now that exemption is gone,
yeah,
those goods are going to become more expensive because of these tariffs.
Okay.
So it could potentially
make Amazon more competitive.
Yeah, exactly.
Wow, that's interesting.
Yeah, so in this case,
yeah,
the tariffs might actually work in Amazon's favor.
Okay. Okay, so that's a lot of information about what's going on.
Yeah, it is.
What are the key takeaways here?
Yeah, so stepping back and looking at the big picture.
Yeah.
What should you, the listener, take away from all this?
Right.
The main message from the article, and I think this is super important to remember,
yeah,
is that while these tariffs are a really big deal,
right,
they are going to cause some disruption.
Yeah.
These well-established consumer goods companies, they have the resources and the experience and the flexibility to adapt.
They've done it before.
Yeah.
They'll do it again.
Exactly.
Okay. And I think this is important for everyone, but the article really stresses the long-term perspective, especially if you're an investor.
Right.
But this applies to all of us as consumers, too.
Yeah, exactly.
Our basic needs for these goods, they're not going away.
No, they're not.
Like, we're still going to need
food, clothes,
oil,
all that stuff.
All right. And so what they suggest is that we
what's their advice?
Basically stick with the quality companies.
Okay.
The ones that have been around for a while.
Right.
That have weathered storms before.
Yeah.
They even say, like, if the market dips because of this uncertainty, it could be a good opportunity to buy in.
Okay.
You know?
Interesting.
Always keeping that long-term view in mind.
Right.
And just remembering that economic difficulties, they don't last forever.
No, they don't.
Which is good.
Good to remember.
Okay.
So, to sum it all up, it looks like while President Trump's global tariffs plan is this big economic shift that's probably going to lead to higher prices on a lot of imported goods, and it could really affect company profits in the short term. The major players in the consumer goods sector, they're not totally unprepared. They've got strategies, resources, experience to adapt.
So they're going to be okay. Hopefully we are too.
Yeah, we'll see. So this leads to kind of an interesting question for you all to think about beyond our conversation today. So how might these big global trade shifts not only affect the prices of the stuff that we buy, but also actually change where and how that stuff is made in the future?
That's a good question.
Yeah. So could we see, new local or regional supply chains popping up as companies try to adjust to this new landscape?
Yeah, that's a good point.
It's something to think about.
It is, yeah. It's something I'm going to think about.
Yeah, me too.
Okay.
So we hope this deep dive has been helpful.
Yeah.
Helped you guys cut through the noise and figure out what these tariffs really mean.
Understand the implications.
Yeah. And as always, we encourage you all to keep digging into these topics.
Absolutely.
Asking your own questions. Yeah. Doing your own research.
Love it.
Thanks for joining us on the deep dive.
Yeah. Thanks, everybody.
We'll see you next time.